Are you treating your side hustle more like a hobby and missing out on key tax benefits? Have you ever wondered how your passion project could actually save you money on taxes? If you want to learn how to turn your side hustle into a tax saving small business, or if you just want to avoid common pitfalls, stick around as we break it down. Hey there, tax warriors. Welcome to JDB Tax. I'm Brian Newstaff, enrolled agent and tax strategist. But I call myself a taxtician, a tax tactician leveraging the tax code to the fullest extent. And with this segment of Tax Tactics, we're tackling a topic that can be hit or miss for taxpayers: the difference between side hustles, hobbies, and small businesses. Why does it matter, you may ask? Well, it can significantly impact your tax obligations and the deductions you're allowed to claim. That side hustle may just be a small business. Let's dive in. Firstly, it's crucial to understand that the IRS scrutinizes activities under the hobby loss rules of IRS Code Section 183. This distinction is vital because while you can deduct losses from a business against other income, losses from hobbies are not as freely deductible. Code Section 162A typically permits the deduction of ordinary and necessary expenses incurred in the operation of a trade or business. So, for expenses to withstand the scrutiny from the IRS, they must be associated with an activity pursued for profit and also be ordinary and necessary for that specific activity. It boils down to the profit motive. If you're engaged in an activity with the intention to make a profit, the IRS sees it as a business. And if you'd like to see more tax content like this, hit the like and comment down below. Now, profit motive is the gateway for a ton of strategies and tax savings. But that hobby loss rule is always there. Under Code Section 183, the IRS and the courts are directed to assume that an activity is engaged in for profit if the gross income from the activity exceeds the deductions for the activity for 3 or more of the immediately preceding 5 years. If that activity has been generating a profit, it stands to reason that the intention was to do so. But when it doesn't pass the hobby loss rule, the IRS may classify that side hustle as a hobby. To distinguish a for-profit business from a hobby, the IRS considers several factors: how you carry out the activity, your expertise, your time and effort, and whether you depend on that income from that activity for your livelihood, amongst other things. Now, the IRS uses a 9-part test to assess your activity's profit motive. 1, how you manage the activity. 2, your expertise in the activity. 3, your time and effort in the activity. 4, expectations that assets used in the activity will appreciate in value. 5, history carrying out other business activities. 6, the history of income or losses. 7, profits actually earned and possibility of ultimate profit. 8, financial status. 9, personal pleasure or recreation. This 9-part test isn't a majority rules test. It's just all the angles they will look at a business to make the determination. Some tests may weigh heavier than others in your specific situation. For those who mix passion with profit, like writing a book or breeding dogs, detailed record keeping becomes your shield. You must demonstrate that you treat this activity as a business, not just a pastime. Imagine an individual who turned a personal challenge into a business venture by self-publishing a book. Despite initial losses, their dedication to transforming personal experiences into a profitable business demonstrates a clear profit motive. Those losses at the beginning could offset taxes from active income from another job they had. And if that book is successful, they have a new income source from a new business. This is what it's all about. If you're not sure what to do, consult a tax strategist. Here are some extra things to consider. If you have an actual hobby that you earn some money with, you can still write off the expenses that are ordinary and necessary for that hobby up to the gross income amount. It's better than hiding that money and getting audited later. Here's another job. If you start a business, a taxpayer may elect on their tax return to deduct up to $5,000 of business startup costs and $5,000 of organizational costs as an expense in the initial year. If you want to know what can be included, consult a tax professional, because you can start off a new venture or your side gig and save big when you're starting off. I know it can be a lot to take in. It's a lot to process. But remember, tax warriors, the path to profit isn't always straight, but the IRS expects new businesses to face some losses. So, however, showing that you're adapting, learning, and aiming for profit is key to proving your business's legitimacy. Keep records, seek professional advice, and be prepared to demonstrate your motive for making a profit. If you have questions, again, consult a tax professional. When done correctly, your side hustle will be a small business, unlocking savings and can even offset active income. And business owners have an arsenal of strategies waiting to be explored. That's why JDB Tax Strategy helps business owners legally save money on taxes without fear of the IRS by leveraging the tax code to the fullest extent. After booking a consultation call with us at jdbtax.com, we'll build a personalized battle plan to minimize your tax burden and maximize your wealth. So subscribe, hit that notification bell, hit all, and join me on this epic quest to conquer taxes and claim your financial throne. I post tax tactics every Tuesday and Thursday. See you next time, tax warriors.